Big news on India's trade front. Our trade deficit just hit its lowest point since August 2021. So what happened? Why did imports fall so much and what does it mean for the economy? Let's break it down. So here's the deal. India's trade deficit dropped to $14.05 billion in February. That's way down from $22.9 billion in January. The main reason? A sharp drop in imports. In December 2024, India's trade deficit had already narrowed sharply to $21.94 billion from a record $31.83 billion in November. This decline was driven by reduced coal imports and a lower net oil import bill. Coal imports surged 55.4% year-on-year to $4.7 billion in December, boosted by a customs duty cut earlier in the year. Silver imports rose even more sharply by 211%, reaching $421.91 million. Exports stayed pretty stable, moving from $36.43 billion in January to $36.91 billion in February. However, exports had contracted in December 2024, falling 1% year-on-year to $38.01 billion, with key sectors like petroleum products, gems, and chemicals facing declines. On the services side, exports hit $35.04 billion in February, while imports were at $16.55 billion, both lower than January's figures. According to trade official Satya Srinivas, these are quick estimates and they are looking into the details of the fall in the imports. Coal imports dropped to $2.3 billion from January's $2.68 billion. Crude oil imports also fell from $13.4 billion to $11.8 billion. These are some of the biggest drivers behind the dip in overall imports. Despite challenges, sectors like textiles, electronics, engineering goods, rice, and marine products showed robust growth, proving resilient amid global trade uncertainties. From April to December 2024, India's exports grew 1.6% to $321.71 billion, while imports increased 5.15% to $532.48 billion. Consequently, the trade deficit for this period widened to $210.77 billion from $189.74 billion the previous year. Now, this is all happening while the US is making moves to raise tariffs. India is trying to strike a deal with the US to avoid major trade headaches. India's Trade Secretary Sunil Barthwal said India is proactively engaged with the US to address concerns of both countries and expand trade to $500 billion. He also lauded the strength of India's exports despite global pressures, highlighting that non-petroleum exports have shown impressive growth. To boost trade further, the ministry recently engaged with the Indian missions in 20 key countries that account for 60% of India's exports, aiming to address challenges and enhance outbound trade. Experts warn that if these US tariffs hit, India could lose up to $7 billion every year. That is a big hit, especially for sectors like autos and agriculture. India's major exports to the US include jewelry, pharmaceuticals, and petrochemicals. But here's the catch. India's import tariffs are way higher than what the US imposes, averaging about 11% compared to the US's lower rates. So what does all this mean? Well, India's reduced import dependency could be a positive sign, but the trade war tensions could stir things up. We'll have to see how this plays out. Till then, keep watching BWTV.